Hello, everyone. Day before the 4th. Everyone, your homework assignment is to listen to Elvis Presley sing American Trilogy if you're a United States citizen, want to be patriotic. And if you want to be driven crazy, then trade megaphone formations. Anyone interested in megaphones? I think there'll be a few out there on the National Mall tomorrow, some megaphones. Look at me, look at me. So EG is in hey, how you doing here? Erastus, Garav, isn't that you, Steve, Switzerland? Garav, Umate. Anyway, I see a lot of familiar faces. I want to wish everyone a great holiday. We have Lydia coming on here later, and also Greg is trying to get on here. So Greg is going to update us with those wave structures. I have traded this, it's hard to believe, successfully from the short side here and here. And I thought we'd get one more high, so I'm going to be patient and wait for about maybe just a shade under 90, and believe that when you look at this weekly, just like Aussie Kiwi corrected before we had the blast this week, I still think this is going to correct. Okay, so I'm looking for a short. Eventually, I'm looking for this. Okay, I'm looking for a third drive up around 94. Is this a weekly? Yeah, it is. So show the monthly. Okay, eventually I think we're headed up here for a third drive. I've been talking about this for about a decade. So it's going to be interesting to see what Lydia thinks. Last time she was on, I made the nose for Pinkert call for 94 when we were down here and starting to negate the breakdown. So just looking for one pullback and then one more shot up here to 94. This might be a great position short up here. And a pullback should be a nice position too, because if you could buy it at 87.80 to 86.80 for a move to above 94, it'd be a nice play. Metals gave it all back, especially silver's been telling you for a while. There's gold. Looks like, kind of a double top. We didn't even make a new high. I still think we will. There's counts take it up to 1480. So this was a great buy down here, just a shade above the breakout of 1375. So this was a $70 move.
Hey there.
Hello.
Hey, it's Greg here.
Hi, buddy. How are you?
I'm fine, thanks.
Good. So you want to come on now and do your review?
Yeah, because I'm in a hurry. So.
Oh, yeah, go ahead. Go ahead, buddy. Do you know how to take the screen?
Yeah. Okay.
Nice to hear your voice. It's been a while.
Yeah, as you know, I was on vacation, so.
Yeah. Living large.
Yeah.
Like not a micro lot. You're living like a 10-lot life. Huh?
Even when I'm on vacation, I just always have to keep one eye on the markets, because you never know how what markets will actually do during summer. It can be very slow or it can be very unexpected.
Okay. Well, being a father is always unexpected, right, Greg? And you're a great one. I've been following, your life a little bit. I mean, the team shares their life and what they do with their families and everything. And
yeah, of course. I think that this is very important for everyone who is actively doing any kind of a business, to show also a real family life, and to show you that you're a real person, not someone who is hiding behind the screen.
Yeah,
you have to be transparent. And
yeah, I'm the Wizard of Oz. I hide. I only do audio now. But you know what? I'm thinking about maybe we start using our webcams and let people see what we look like down the road. What do you think?
But Steve is always naked, so.
Oh yeah, we don't want to. Yeah, we'd lose a lot. We'd lose a lot of subscribers.
Greeks are very hairy, so I'm not sure if anyone wants to.
Yes.
Hey, not all of us, okay?
Yeah.
Yeah, Stelios is hairy from the chin down.
Okay.
All right. Well, anyway, Greg, you seen any inflection points? I see that we have. Oh, you're going to show Euro GBP. So you agree there's some type of pullback coming?
Yes, I just
pretty
switched to,
deep, huh?
yes, I will just switch to this one because I noticed that you are covering it. So actually, I agree. Here, I think also that we'll see that we are probably consolidating, and then next leg higher will occur. Just wondering if maybe this trend line for now will still stay in place. As you know, I'm looking for a triangle here. It's an ABCDE pattern, and we can be talking here for a wave D. I have been looking for this potential wedge now that can be here.
I'd like to see it touch that line one more time.
Yes, and actually this line could be coming in a very similar zone here compared to our longer term.
Yeah, I'm looking at exactly the same thing from the previous
We all are. So that means this is a good trade if everyone's stalking.
Yeah, I just don't know because euro dollar is looking probably to see more upside. I see cable also at potential support zone. So I'm not really sure if these two will make such a strong divergence actually to cause a movement, a very nice movement at euro pound.
So if we're looking for more upside in euro, maybe what, like around 1440 or something?
I will firstly take a look here on dollar index. As you know, we have broken here below this, out of this upward channel. We tested it from the outside, fell even further. But looking at the wave count, I think that there can be more weakness coming. As you know, when I'm tracking higher degree correction, which clearly should be the case since we completed this 5-wave movement. So maybe this, because wave 4 was quite complex, okay? And if we are in a higher degree correction than it was this wave 4, then obviously I want to see maybe something similar like this in time, or at least deep in price, okay? Because we are in a higher degree correction. So former wave 4 termination point was at 95, and I would not be surprised if we will actually go down to this level. So my scenario here is actually that we are here forming still wave A, still only first leg of a bigger pullback.
Leading diagonal?
Yes, that could be the case. I mean, tomorrow our non-farm payroll, not tomorrow, on Friday, our non-farm payrolls report. So I think that it can be pretty interesting here. If we'll see prices moving to the downside here, then I would be even more confident that this higher degree correction is still only ongoing. But of course, I can be wrong. If we'll see a very strong jump in price here and maybe take this trend line out, connected from recent highs, from May highs, then obviously I will have to turn bullish immediately. So I don't want to fight anything here ahead of the data, but I just think that we may get more details about the next.
And your first dollar chart would, if we took out that wave 4 level, 95.14, that would solidify the bear case for the dollar, right? Kind of a line in the sand, bull's last hope?
No, not really. I mean, there's, when you're tracking or looking for prices to come down back to the previous 4th waves, you will always look at the swings of the previous 4th waves, and even this wave A was part of a wave 4. So if we broke 95, then watch out for 93.70, 94 area around there.
Okay, thanks for clarifying that to an amateur Elliotician.
So the whole zone here will be very important. Okay.
Yeah.
It's actually, as you know, we can make a pullback for 100% compared to the previous 5-wave rise, but based on the personality and guidelines, that's the area we want to pay attention on. Okay, so if we go to euro dollar, here, same thing could be going higher for a wave A. So this is the wave A that I'm tracking, and again, a lot of important resistance swing levels was here around 1.18 level. Okay, so maybe we'll see more upside here. Also, I posted, let me try to find on Twitter, I posted a chart about the, but I'm not sure if it's here, connection with the emerging markets. Okay, just give me a second. Okay, here it is. Okay, so here on the upper scale you have emerging markets, and here we have at the bottom we have euro dollar. Okay, and you can see that there were some similarity here regarding swings. Okay, when this market, emerging markets, turn to the upside, that's when also euro dollar moved higher as well. But if we are looking at the quite clear pattern here on the emerging markets, I think that we are forming a three-wave recovery. So wave C seems to be in play, and if that's the case, then even euro dollar could see potentially more upside. Or on the other hand, we could see more dollar index weakness. Okay, so that's also something that maybe we should keep an eye on. And also, if we take a look at other markets like Aussie, okay, here we have Aussie dollar. It came very nicely down from February highs. It retraced 78 or 61.8% compared to this spike. So I think it's a very nice bounce from there after 7 swings within this correction. And this is the number of flags that represents complex correction. But what is important is that we have seen a very nice and impulsive bounce from that area. Looking at the 4-hour chart, clearly we have taken out this channel resistance. We also spiked and probably cleared some stops above 70.20. So maybe we are now in a first correction that will take us later higher, either into wave C, maybe even wave 3. But this is a very nice pattern, and I'm expecting more upside. I see also gold. If we take a look on gold, which, as you know,
yeah,
Aussie,
you have a nice pattern in play working live, up well over 1% on Aussie. Nice work.
Yes, actually, I went long Aussie when we were trading here around 6940, if I'm not mistaken. Why? Because on a smaller time frame, I already was able to count 5 waves here. Okay, so it was only the question if we will just continue straight to the upside or we will see a pullback. But in either case, I was looking for even higher prices. And actually, as I said, this trend line that was broken, this trend line could be very important if we are going to see another leg down for a retest. So here's this intraday chart. If I updated it a little bit, maybe we are now in a wave B. Could be maybe even big irregular formation. So if we come down this wave C, watch out for 6940 area. That's, at least this would be very important for me because it was level of the previous fourth wave of 1 lesser degree. But if we don't come to this zone, then, and we'll just continue straight to the upside, then this would tell me that bulls are even stronger than we think. Okay, so
by the way, Gregor,
even get a pullback.
Gregor,
Yes.
we have ADP data in 30 seconds, so I'm going to interrupt you.
Yeah, so yeah, sure, take it
Just
over.
to give the number. So are you back in Slovenia?
Well, excuse me, what?
Are you back in Slovenia?
Yeah, sure.
Okay, nice.
10 seconds.
Let's see, 10 seconds. We have a forecast of 140. I remind you that last month we had an abysmal 27 reading. So let's see if the market is going to rebound. Any second now. 102. So the forecast was not really high, but yet we missed once again. So this is the second month in a row that we have a lot softer ADP. Let's see how this is going to affect the dollar and the market direction in general. Go ahead, Greg. I'm going to interrupt you only if we have we now see some dollar weakness coming through following the soft ADP. I doubt it that we're going to have something like groundbreaking happening within the next few minutes as you speak, but if I see something huge, I'm going to let you know.
Yeah, sure. Okay, so Aussie dollar, as you said, is bullish, and I think this Aussie may finally catch this correlation with gold, because gold is strong. We see room for more dollar weakness, so maybe that's the timing when Aussie could also finally continue even higher. So on gold, what we are looking at here after this recent push higher is that this very important resistance at 1360 was taken out. So obviously this wave B correction that I'm tracking up from 2015 lows is going to be higher and more complex. So watch out for 50%, maybe even 61.8% area to be seen, but that's the zone where I would expect bulls to slow down. Also, in this wave C actually can be very similar, let me check, compared to the distance of wave A. So I want to see where this comes in, right at this 61.8%. So this is quite
Grega, I know, I'm fully aware, as you know, of, and I have no disagreement with both the views that you had before we broke above the triangle, having to do with gold's fate. I have to ask one question, though. Is there any scenario that you can see as possible at the moment that would point to another kind of account with longer-term bullish implications from here?
You're asking this because of Stelios? I'm kidding.
Yes, he begged me.
Do a bullish wave count, no matter what.
Yes, exactly.
Yeah, that would be silver, which is really severely underperforming, Greg, gold. Any view on that? And maybe even, do you track gold-silver ratio?
Yes, I'm tracking it occasionally, but I have, I will show you also charts with the S&P 500.
Okay.
So actually, if I would label the bullish wave count here, I mean, I could label it, but that would probably go against my rules and especially against the guidelines. Okay, because the previous decline was very strong and we have seen one extended lag within this cycle. So it looks like a perfect 5-wave fall. Not to mention this ending diagonal that can occur only in wave 5 or wave C, not to mention a triangle before this final drop occurred. So triangle also occurs in a 4th wave position. So everything here is looking like a very nice pattern. So if I would label it differently, I would probably be forcing my bias. I definitely don't want to do that. So what I see is still, I mean, we have bounce, we went sideways, and we are now again higher. So for now, it's still only a 3-wave move, okay? And I'm looking still as a potential limited upside, and as I said, gold versus S&P ratio. This can be maybe even more important to see the overall view for metals rather than gold versus silver. So I'm looking here at a very sharp fall, as you can see, from 2018 highs, and now we are recovering, but with a slower pace. Okay, it looks like a corrective movement.
Yeah,
so
it looks like a double zigzag there, right?
Yes. So maybe more upside is probably coming here, which means gold could do better than the S&P 500. I think that stocks will stay in consolidation for summer, and maybe that's the timing when gold also will see move towards 15, maybe 1600. And then we see on this ratio, we see a new swing high and then new cycle in September. So when I will see prices here in wave C, that's when I would expect that this wave B on gold itself will also complete. Okay, so for me, this is probably a very important chart for risk on, risk off move, gold versus the S&P 500. And as you know, on the S&P 500, I still see room for more upside.
Yeah, I agree with you. The DAX as well, if you ask me.
Yes, I mean, S&P 500 is at the highs. DAX is still not there.
Yeah.
right? So we are still, look how far away from the highs, 8,000, points. So actually we are going to see wave 5 here, probably even higher, which means that stocks will also stay correlated with European markets, could extend higher into wave 5 as well. And obviously when these moves will happen, that's when gold may see limited upside. But still, we are not there yet. We are in a wave 5 on gold. Here, you look on the here on the 4-hour chart. So we are now in a wave 5. First target would be here at 1470 or at the upper parallel trend line. So we'll see what will happen there, but we will have to respect potential reversal once we are at the higher prices for a wave 5. Okay.
Cool, Dario.
Perfect. I have some questions for you if you're done now with what you had in mind.
Yeah.
Yeah, Steve wants to pump you now. He doesn't want to subscribe to your service.
Yeah, I don't.
For free now.
I do. Yeah, exactly. I'm a free rider. Yes. Yes. I'm a cheap bastard.
Funny, buddy. All right.
So, Grega, depends on how you draw the line, but bottom line I'll tell you. But bottom line, to make a long story short, looks like USD CAD is starting to look, very, 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 very fragile. I was monitoring an ascending, larger than what you have there, a larger ascending channel, which seems to be breaking down. I'm also viewing this, as I see you've labeled it there, as an impulsive move lower. So the question is, what do you think is going to happen with USD CAD from here, one? And two, because they're quite correlated, how do you view the recent move lower from crude? In your view, is it the beginning of another larger leg lower, or is it part of a corrective move?
Firstly, on dollar CAD, as you know, I have been tracking this correction for a while. I was expecting lower ABC correction. It's still incomplete, but we already spiked out this wave A swing low. However, there is room for more weakness. The ideal support is here at 1280, maybe 1.290 area, to complete this 5-wave decline. Okay, and at the same time, I think when this market, dollar CAD, could complete this pullback, the crude oil will see even more weakness. Okay, so let's keep in mind that in second part of this year, I will be, or after the summer, I will be looking for dollar CAD reversal back to the upside, and that's when crude oil will most likely see limited upside as well. I have been warning.
Same question that I asked before, which is the following: how? I mean, you are very confident with your count in gold. Okay, how confident are you with this current count in USD CAD? Because sometimes I know that you have a main count and you have an alternative count, and sometimes you don't favor extremely much the main count with the alternative count.
I will say this, that I'm more confident into dollar CAD wave count than I'm confident into a crude oil bearish view.
Okay. I get it.
This one is very clear. I mean, it has 3 waves down. It made 3 waves down. It recovered above this very important corrective channel line. We are still holding the major trend line support connected from 2012 lows. And looks like that this current ABC decline could actually complete itself right at this major trend line. So as long as that's
as long as this is, if I am to become more technical, and I know that many people don't follow so closely Elliott Wave, so I'm not going to push it. If all that is based on the theory that the recent move higher that we've seen is a leading diagonal, right? Otherwise, this slow and overlapping rebound that we've seen has clearly corrective characteristics. So the only The only bullish interpretation is that is to prove that this was a leading diagonal, actually, there, right?
Yes, exactly.
Okay. Okay.
So
Which
regarding crude oil,
which level would make you bearish if broken in USD CAD? So which
probably if we go back to 1.250, that would probably, I would consider some new wave counts.
Okay.
Either more complex wave 4, maybe even some kind of a triangle or something. But if we go to 1.250, I would definitely look for something else.
Okay.
It also depends where crude oil would be trading then, but on crude oil is still what is very interesting that we reversed lower from that channel line, so it looks like that we are bearish. And on the 4-hour chart, what will be very important is potential overlap with 54.97, because this overlap would make this rise from June lows in 3 waves. That would be your confirmation. And another, if we see this overlap, the another confirmation would be on a smaller time frame. On the 1-hour chart, when with this overlap, if we go lower from here, you would have 5 waves down from this high. Okay, so in such case, you would have very important 2 confirmations. 5 waves down on a smaller time frame, plus an overlap with this wave 1 on a higher time frame on the 4-hour chart, because we know if you track this as a wave 4, then this must not move into territory.
Of course.
So if this, from a trading perspective, okay, because it's very nice probably for everyone who listening, let's move away from analysis and focus on trading a little bit. I mean, from a trading perspective, if we see these 5 waves up, I will watch out for a 3-wave rally and probably short, and look for shorts later.
Okay, I totally understand. So your main case scenario having to do, your main count having to do with crude now is? Bearish. Okay. I understood it, just wanted to clarify for people that are listening in. So you're looking for a rebound after another push lower, and then
watch out for 55 level.
Yeah, and then you're looking for shorting opportunities. Yeah.
After a bounce, exactly.
Yeah, I was of the same idea. I was looking for a longer term bearish implication, but I have to admit that I lost the opportunity to be short because that 5th wave that you have marked there, the end of C, I thought it's going to extend, higher. So initially I was looking like for a higher high before failing. So yesterday's move lower, though, confirmed to me that probably the bearish move has already resumed.
Yes, also what I see now is that we make a very nice reversal exactly from 61.8%.
Yeah.
Trend line.
After also, there were more technical events, after also completing the rectangle's extension higher, because the consolidation that we had at the lows for crude was a rectangle. Once we broke above it, we fulfilled the target of a rectangle, which is, the height of the formation added to the resistance breakout. We actually extended a little bit longer than that. We found a 61.8, as you said, and as it seems, after consolidating for a short period of time there, and that's what got me trapped, because in the eye, that looked like consolidation, although we did incrementally spike to a new high, which fulfilled the minimum requirements for a wave 5. I was expecting, a little bit of a bigger extension higher, and that is how I lost the shorting opportunity. But it's okay; it happens. Okay,
Okay, so I will.
Let me see if I have any questions for you, Grega. Do you implement fundamentals into your wave counts?
I put out one tweet a few days back on Twitter why I always focus on price first and label the wave counts without reading any news or anything.
Yeah, I'm with you there.
Because that's because price itself for me contains, it's the result of all informations available out there.
Yeah, this is
the price is
biggest
one particular spot.
yeah, this is the biggest argument for technicals, is that price encapsulates, includes all the fundamentals that matter to the market. Doesn't mean that it takes into account everything. It takes into account everything that the market cares about at that
Exactly.
given point in time.
Exactly. So,
by the way, we had some data.
Yeah.
Really
Canada posted a trade surplus, which is
Canada, besides the Canadian trade balance, which was a lot better than expected, everything else was as expected, more or less. Thank you very much, Grega. Thank you for being with us.
Thank you.
Thank you, Grega.
Okay, have a good day, guys. I have to
Thank you, Wizard.
pick up kids. Okay, bye-bye.
Next week.
Bye-bye, mate.
Bye-bye.
So,
Okay.
Stelio, just
Yes,
go over
sir.
the data fast. USD CAD,
Yes, sir.
you're right. The trade balance, Canadian trade balance, actually a surplus of 0.76 billion. That
Look
is.
at the U.S. trade balance, minus 55 billion, and it's going fast. It's going fast towards the all-time low reading of minus 60-something billion, which was in the crisis. This is, if you look at, I was just looking at the like a 10-year, 30-year chart of the U.S. trade balance. Oh my God, it's not looking good.
It's drilling for oil.
Yeah.
U.S. initial jobless claims as expected. I mean, 221 versus 223. It's completely.
Yeah. Who cares?
Yeah, exactly. U.S. continued jobless claims more or less as expected as well. So nothing really, to write home about on either of those fronts. But I know that we have more news, Stelio, including news having to do with European positions. I'm going to let you go over those.
Yes. So after a lot of denying yesterday, Christine Lagarde is going to be the new ECB head, and it's a controversial for some move. We did talk about it, Steve, you and me, earlier yesterday, and it's an interesting choice because she's not really an economist, but she has been she has shown from her role in the IMF and the being the French finance minister that she can handle difficult situations, and maybe this is what's needed. Draghi has been, in my opinion, a very good, if you can call it central banker, good. But yeah, he's been very good, very consistent, and he's done whatever it took, just like he said.
Yeah.
So that is interesting, and so that's really the main one. Also, the chair of the European Union Commission. I can't pronounce her name.
Me too. I'm not sure how to pronounce it. That is.
But I don't know her.
She is the German Minister of Defense, actually.
Yes, I mean I clearly don't know her, and I don't know I don't know what she is like in her history. But from what I'm reading from people who do, she's apparently a good choice, and she's been very very good in the previous posts. I mean, we'll have to wait and see what happens. But really, the main appointment was Lagarde, and let's see how that goes.
Actually, it's a surprise in many fronts, because until a few weeks ago, Weidmann was considered a very likely candidate for the central bank. And now his name is escaping me. How's the other German guy from the right-wing party?
Schulz.
No. For the
Europe. Right.
Hitler.
Oh.
Hitler, first of all,
he was pretty right-wing, don't you think?
No, I don't think, actually. I'll tell you what I mean.
Let's not go there, Steve.
I want to remind you.
I apologize. I retract my statement.
I want to remind you that Hitler was the head of the socialist party in Germany, right? I mean, that's what he claimed to be, right? Yeah. And we all know how that worked out.
he was more than a cheap bastard. Anyway, so okay, sorry I said that.
Let's just say the planet would be much better off without him.
Okay, so the what else we have? Okay, we had some minor, well, not minor, we had some PMI numbers out of Europe, and they were surprisingly good. Services PMI of Germany, Italy, France, they all beat. and actually not France, sorry, Spain, Italy, whatever. You know, the whole, as a whole, they beat. UK service PMI was worse than expected at 50.2, and the composite index now in recession, below 50. So this is not good.
A lot of
What was their
actually-
PMS reading? Go ahead.
Yeah. I think we
and
have
the
to make we need to make the show like PG-17 or something.
and our daily
Steve.
Yeah,
daily
R-rated,
dose of humor comes from Italy again. Remember the whole story with Italy and the budget deficit, and how the Europeans were saying, look, it has to be low, otherwise there's going to be repercussions. And they said, yeah, okay, we're going to go with what you say, and it's actually coming up much higher. And the European Commission said, look, you have to do something because there's going to be disciplinary action. And today there's been a statement that they have decided not to propose disciplinary action against Italy. So,
oh my God, shocking.
What does that tell us about
the
Yeah, I know. So
I'm honestly shocked.
For the moment, they're not imposing any disciplinary action, and the Italians will try to do their best. So
yeah, the planet is becoming slowly but certainly a circus. Okay.
yeah, and that is it, my friend.
Okay, cool. So, time for chart porn. Coach? Yeah, that's not R-rated, by the way, the chart porn, I guess, right? So, Coach, any questions before we begin? I mean, anything you want to focus on? Coach has a sensitive bladder. Okay, so let me see if we have any questions that we haven't covered, because Gregor would love to stay longer, but today he really had no more time. There were questions actually about Aussie yen and CAD yen for Gregor. Gregor is not here, but I know very well that if he was here, he would gladly go over them himself. So let me give you a freebie about, since you are asking Gregor about what Gregor thinks about Aussie yen. About Aussie yen and CAD yen. So his view on the Aussie yen is this one. Okay, as you see, so he's looking for an extension higher now. So he thinks that we've actually found a low from a B, as you see, A, B, C. So quite complex to read it. A was this rebound here. B was this flat here, and then this extension lower was C of B. So now he's looking for an extension higher towards C. So he's looking higher for a period of time, and I'm guessing that his view on CAD yen. Let's go to daily.
Steve, that spike low was the day the equity markets crashed, right? And the yen strength.
Yes.
Yeah, okay.
And we have that spike low showing up on all yen charts, on some more prominently, on some less. So CAD yen, he was looking at this move lower, as you see, as a B, and so he's looking for a C higher. This was a double zigzag lower. He thinks we've actually completed that. Let's go back to the chart and have a look at it from through the eyes of simple technical analysis. And as you see, my view here is not very dissimilar. I was looking for this descending channel here, and then we got this nice inverted head and shoulders formation here as a potential bottoming pattern. As you see, even earlier today, we almost made it to retest this inverted head and shoulders formation's neckline. In my opinion, as long as we're holding above it, there is indeed the bullish interpretation. So unless we invalidate that, yes, there is a bullish interpretation looking to fulfill this inverted head and shoulders formations target, if not extending more than that. But in general, as you see, price action has been very choppy and overlapping. And I don't find it surprisingly that from what you see from Gregor's count, he's looking at the larger formation as a triangle from what I saw there. So Yeah, I also favor the upside as long as we have this inverted head and shoulders formation. Now a viable target in my mind would be this 78.6 previous highs as well, just above 84. Okay, now if you want my point of view on Aussie yen, I also think that there is a decent chance to move higher. We have anyhow broken above this descending wedge. We did find resistance in an important horizontal support resistance area, but as you see from my drawing here, I expect that even a rebound higher can be a little bit more complex, which means that after a pullback, we've already seen a pullback, which might be sufficient, by the way. I expect another extension higher. So I also agree with the point of view, I don't want to project a lot forward in the future, but I would find it quite likely that, in the short term, the next move might be higher. If we haven't found a low today, perhaps extending a little bit lower, I would be looking for support at 74.70, 74.80. I think as long as we remain above that area, at least in the short term, I do favor further rebound higher. So you got 2-in-1, both Gregor's point of view and mine. What other indicator you use with Elliott wave? He's not here, but I can answer. Weber. Yes, thank you for the name I was looking for. Yes, it's Weber. In the name I was looking for. He was the favorite for a long period of time until a few weeks ago for being the head of the European Commission, taking the place of Juncker. So thank you for reminding me the name. So you're asking what other indicator he's using for Elliott wave? RSI. He's just using an RSI. The vast majority of traders that are experienced and do well, in my opinion, I mean, from paying attention, don't usually use more than one or two indicators, right? I mean, there are 2-3 different types of indicators and then multiple variations of each type. So, too many indicators don't really tell a different story. I can tell you, I've spoken about that in the past on Face, and, this doesn't change. I mean, just a simple momentum indicator, RSI is one example, I think is more than enough. Experienced traders don't actually need any indicators. I mean, I'm not saying that they shouldn't be using. I'm saying that even if you take away the RSI from them, they will still be able to eyeball what the RSI would be doing, right? Because the RSI is just giving you a past view of X periods. For example, in the RSI, the usual is 14, of how the momentum has been. But that is something you can observe just by looking at price action itself, right? So let me see if we have any more questions.
Love that real simple implicator.
Yeah, as you like to call it,
Yes.
Coach. Yeah, the real simple implicator. Yes. By the way, Coach, since you're here, do you have any requests having to do with charts you want us to look at? That's the first question. Second question.
Someone just sent me an article on Business Insider that the bond market is set up for a surprise like 94 was, and this guy's been trading since 93, the bonds. And basically, Greenspan tightened when we were coming out of things. So I think a no cut in July would be just as shocking to the market as in 1994 a hike was.
One, I agree with you. A no cut would be a huge shock. Two, the chances of that happening in my mind are 0%.
Okay.
The Fed.
That's why it would be shocking.
The Fed has proved, unfortunately, that the only thing it is there to do is
keep the market up.
Satisfy market's expectations. So far, since years ago, we've seen that the Fed keeps doing what the market is leading it to do. So it doesn't dissatisfy the market. So for me, it would be more than a shock. It would be like a huge shock, because it would be completely out of their habits, and their habits have been formed like for years now.
Well, I strongly recommend you have a defibrillator around.
Yeah. So
For the
one more thing. If that happened for any reason, we would have a huge move lower in the stock markets. Do you expect this Fed to actually negatively shock stocks? I think it's the last thing they're going to do. Because one thing I have no doubt about is that if it comes to the FOMC day and they say, listen, for X, Y, Z reasons, it doesn't matter what they're going to say, we're not cutting rates, I think we're going to have a minus 3% day in the stock market easily. Easily.
Okay, so how about this? I know everyone's supposed in government's supposed to put personal feelings aside and et cetera, but President Trump has been pretty rough on Powell, and you know, I saw Navarro on, and you know, they're all laying out any negative things that any person from the other side is saying about the economy, even though the employment numbers are good and the market is at highs. They put all of that on Powell, that he didn't cut, that it was a mistake for QT, everything. He might be demoted. So I don't know. I mean, is it possible that Powell wouldn't care if the market went south for 16 months? So, you know, he doesn't.
No, I don't think it is, because Powell, unfortunately, has already proved that he has no dignity.
He has no what?
Dignity.
Oh, you mean because he did Kumbaya with Bernanke and Yellen?
Yeah, I mean, he has already done the biggest U-turn that I remember, you know, as long as I've been...
Okay, well, do you think he knows that people like you think that about him? And you know...
Seems like a smart guy. He must understand that, yes.
Okay, so, you know, how about a little rebellion by Powell? And he gets tough and doesn't acquiesce at the next Fed meeting, and you're 0% chance.
That takes into, you know, that doesn't include the following assumption. It was much easier for Powell to be, in quotes, a rebel by continuing to follow the policy he had so well photographed that he would be following. So if he was undignified enough to make a U-turn based on what the stock market and, let's assume, what Trump wanted him to do, then, so if he was willing to make that move, then I see actually no reason why he would want to make it go away now, because he would create bigger problems than just sticking with his initial course.
Well, then you didn't understand what I said. So Trump, President Trump ties a lot of his success to the bull market and stocks.
Yeah, that's true.
And if the Fed can engineer, just like they engineered a bull market, engineer a correction, doesn't have to be a crash or a depression, into the election next year, maybe the next president won't be hammering the Fed the way this one is. You ever think of that? He has a longer term that's going to run past the current president's re-election.
If we take into account your assumption, that would mean, let's continue with some assumptions. In my opinion, if the bull market is over by election time next year, Trump has 0% chance of getting re-elected. In my mind, that is exactly how it is.
Okay.
I see no way that Trump can be re-elected in a teetering economy that is either in the brink or within a recession, and that the bull market and stocks has failed. Okay, so taking that into account, who do you think?
Powell knows that too.
Who do you think? Yeah, everybody knows that. But the question: who do you think the next president is going to be if that's the case?
I have no idea.
I have no idea either. I wasn't asking about a person specifically. I mean, it's more or less going to be someone socialistically leaning. From what I see from the candidates that the Democratic Party is putting on, the vast majority of them are in a competition of who is going to give more free stuff to people. Yeah. So in order for that to even have a chance of working in the short term, they need MMT. So in essence, they need the Fed to be their best buddy. So what I'm trying to say,
That's down the road.
yeah, not that far down the road. They're going to need it immediately.
Look
So
how
bottom
fast
line,
things can happen in the market, Steve.
so bottom line, the next president has no option other than being very good friends with the Fed.
Okay, I agree, but I'm just talking about the next meeting.
Yeah, irrespective of if the Fed has helped, in their point
I'm
of
talking
view,
about the next meeting.
dethroning Trump or not.
You're
Next
projecting
meeting,
way out into the future. Okay.
Next meeting, in my opinion, as I told you, the market is pricing
0%.
100%.
All right, I'll do a Duke Brothers bet with you.
Okay.
Trading places.
Okay. I'm not saying that the risk reward isn't. I mean, I'm not saying that the risk reward isn't for them not cutting, because always when somebody offers you like a free option, you take it, right?
What's your downside target in 10-year and 30-year yields? Do you think we're bottoming here for at least a bounce? It's starting
I think we're very overextended, and I don't know what is going to be the catalyst, but I do think that we should see some kind of a corrective.
Looks like a third drive to me.
Yeah, it is very likely. I mean, we are seeing multiple divergences. We are seeing this likely formation here, even in the boons that we've broken above this ascending wedge. Usually that is like one last, hurrah higher before reversing lower. So definitely I wouldn't be buying bonds here. So I wouldn't be selling the yields down here. There's no question about it. Now, does this mean that they cannot move further? No, it doesn't. It just means that there is absolutely no viable risk reward for somebody to be looking, lower, because where would you place your stop loss? Right. Now, having said that, yields in the 10-year, many people haven't realized probably, are already, have already a 100 in front. So we've dropped below the 2%. Needless to say that this is following, this is happening globally. Just to give you an idea, the GGBs, the Greek government bonds, the yield has fallen to 2.2%. I have no clue who is stupid enough to lend money to Greece for 2.2% in 10 years, really.
Someone that drank a whole bottle of Ouzo.
Probably you need like a whole case of bottles of Ouzo to do that. Yeah. So basically, yields are in, make no sense territory, globally at the moment. Now, does this mean that they cannot move lower? No, it doesn't. But it definitely means that the market is now quite piled in the same direction. Everybody has now become comfortable with yields going lower after getting shocked, as you like to talk about. A few months ago, you remember that when we were breaking above 3% in yields, everybody now, it was like common thesis that we've now entered an era that yields should move higher. And then everybody got shocked. Now we're like below 2% in the 10-year, and now everybody's almost looking for lower yields. So I do think that even in the short term, some kind of a shock, rebounding higher in yields can come. I don't think the Fed has the guts to be the one that is going to produce that kind of a shock. I don't think they want to go against a market that is pricing in 100% a rate cut. I think that they're going to be penalized very heavily from the market they're striving to save if they do that. Okay.
Yeah, buddy. Don't talk about Cape.
We have some nice comments. Trump can be elected in war times. That is true. That is one scenario. Yeah. We have a friend here saying legalizing cannabis nationwide guarantees re-election. I'm really not aware of any statistics that would point in that direction. I'm not refuting what you're saying. I'm just saying that I'm unaware. Might be the case. Who knows? Also, already said.
What kind of munchie do you think President Trump would recommend to the public?
What kind?
How about Tic Tacs? He talked about he would eat Tic Tacs a lot before he saw beautiful women. Okay. Anyway, Lydia's here. If you want to wrap it, or Absolutely. You have time, you know.
Absolutely. Not really. I mean, we've covered the questions. Yesterday, not a lot have moved since yesterday. So yesterday we did cover other stuff as well. These days I'm doing the end of day analysis, so you can find everything there as well if you're a ForexAnalytix member. Blake is going to be back with us next week. Anyhow, tomorrow is the 4th of July, so let me wish every one of you, every US citizen, so everyone
we
that
will be
celebrates
closed.
for
Washington will be transformed into Moscow or any other type of state that used to display their might with military parades.
Okay, so enjoy all that. And so, Coach, we don't have a webinar tomorrow. We'll be back on Friday, correct?
Yeah, NFP, buddy. So, take a
course.
day off and
we'll
eat
be ready
about
for
100 hot dogs. Really get toxified, and then we'll trade the hell out of the NFP on Friday. Is that a deal?
Absolutely. This is a deal. Let me cover one more thing because we have a question. You saw Greg's point of view. I agree with him after the day we had yesterday. There's a question about crude. And as you see, I've marked the same area that Greg was talking about. In my opinion, this makes the 55, 54, 50, 55 a very crucial support area in crude.
Yeah.
I think that there is a chance that we've already resumed, the move lower with, what happened yesterday.
Yeah.
But in any case, a break below like 40, 54, 50, I think is going to be 100% a confirmation that something like that is happening. Now, my viewpoint in gold.
What a classic top on an OPEC agreement.
Oh, yeah. The usual buy the rumor, sell the news.
Mm-hmm.
Absolutely.
Right at the 50-week moving average. I mean, it kissed it.
It did. Now, having to do with your question in gold, I think that gold, despite the price action today, that so far is, we are unchanged after retesting almost the previous high. What I see here is just a bull flag, so I have no reason to change my thesis. I think we're moving higher from here because we had a question about that.
He loves only gold, Goldfinger. He's the man with the golden touch. He loves only gold.
And last
doesn't
but
like
not
silver because of the ratio. Huh?
Yeah, absolutely. And last but not least, my viewpoint on USD yen is that I would remain bearish. I mean, I've kept a bearish point of view for quite some time now, as long as we stay below 109. Okay, so thank you. Enjoy the interview with Lydia.
Yeah, Lydia's here. And there's one question from Antonio. Steve, maybe you could show Antonio where he could watch the webinars. Oh, did Lydia just disappear?
He has two options. Option number one, go to YouTube, type ForexAnalytix, and you'll find yourself in the ForexAnalytix page, channel. Okay. Option number two, you can go to the ForexAnalytix website. There, here on the top, you can find a tab called Webinars. You click on it, then you can go to playlists, for example, and you can see all the videos arranged within playlists. Okay. So nice. Those are your two options for watching previously conducted webinars. Okay.
Thank you, Steve.
So do we or don't we have Lydia?
Yeah, Lydia's here.
Okay.
I'm promoting her right now. It looked like she disappeared for a second. She'd probably, she could tell what kind of mood I'm in. All right. Who wants to talk to me? All right, buddy.
I do.
All right. Well,
on a daily basis.
Have a nice day off.
Thank you, Coach.
All right, buddy. Lydia, I just promoted you to a panelist, and I will unmute you. And you just hover your mouse over the menu to show your screen. Should be hearing you. I'm not sure if you have a microphone or not. Maybe I should have let you know. Hi, Lydia.
She's unmuted.
I
I
know.
can tell you that much.
Yeah, I keep forgetting to tell people they need a mic or a headset.
We don't have somebody that has logged in through phone. I can tell you that. So I
Maybe
don't think
that's her. That's
no,
probably
we
what
don't.
happened.
I said we don't
Oh, we
have
don't.
somebody.
Okay.
Yeah, so it's not that she tried to. Now
Okay.
she's
Now let's
muted.
see.
Let me unmute her. Probably she's self-muted now. So now she's unmuted.
Okay. Hi, Lydia.
Lydia, there is an arrow next to the button that says mute and mute. If you click on it, you can select your microphone and your speaker, which of course can be a headset. So make sure the correct ones are selected.
Okay, she's saying I can't hear anything. I have no sound.
Okay, so you should tell her that. Probably she hasn't selected the right output source coach.
I don't know how to tell her that.
That's a good
It
question.
cut out about 20 minutes ago. Can you answer her question? It's on the chat. Oh, it's private. Just tell her what to do.
Mm-hmm.
She's messaging us.
Okay, yeah, I can see it. I can see it.
Yeah.
Okay. Okay, I wrote to her. Let's hope she reads it.
Maybe she needs to log out and come back in. Anyone else have their volume cut out on them 20 minutes ago? It might be her connection.
No, I don't think so, Coach.
Okay.
I think everything's working perfectly fine. If she hasn't used the platform before, she just probably needs to choose the correct.
Got it. You just said got it.
Okay. So can you hear us now? Yeah, but we can't hear you yet.
Can't hear you.
Yeah, we can hear you. Now you can hear us, which means that you selected the right speaker source. Make sure you've all...
How's that now?
Oh, yeah, perfect. There you go. Perfect.
Hi, Lydia.
Okay, now you can...
Welcome to Zoom.
Welcome to Zoom. Now you can click on the share button. It's going to ask you,
got you. All right.
take the screen from me. You say yes, and then it's going to show you a pop-up window to choose the screen you want to share. Perfect. There you go.
Here we go.
All
Excellent.
right.
Woo!
Live TV. We got it. Okay. Thank you, Steve, for helping out.
Thank you, guys.
pleasure.
Thanks, Steve. Thanks, everyone, for your patience.
Lydia, great to be able to talk to you today, and want to thank you for being here before the holiday. A lot of people already, in that spirit and mode, and I'm very interested in some of the crosses that you're paying attention to. But yeah, let's start with. Remember our last interview?
Yes.
Okay, go ahead. Tell us what you're seeing.
Yes. So when the euro pound broke above 88.50, I was like, oh, Dale's right. It's going above 0.9, and it's been hesitating. We have a lot of divergence with the momentum and price action, but we just cannot seem to get a correction. So this is basically what we've been enduring for 2 months now, right? Since May. And we had these I think this was 12 straight candles higher, and then we just kind of consolidating over time. So we don't really get to see that a lot in Forex. We usually get a nice healthy correction or retracement in price. And we just haven't gotten that in the euro pound at all. After the break above 88.50, and the lack of retracement, actually, I've been convinced that we are heading higher. This is probably the only currency that the euro can rally against right now is probably the pound.
Interesting. Okay. All right. Actually, I think that we're approaching, I've been, one more shot up is what I'm looking for. Is why it's tough, Lydia? You have a megaphone formation, which is like a broadening top formation. People get bullish at the highs and then bearish at the lows, and it rewards no one except those that are willing to trade at the extreme. So I actually think that it's a bull market. My long-term targets are still 94, but God, I think that that was such an important level down there at 87.40, 86.80 that I think it might be a magnet to pull it back down there.
If we look here, yeah. We've been going straight up for weeks now. And yeah, I agree that 86 level when we couldn't stay below, we spoke about that. We couldn't stay below 88, 86.50.
Yeah.
Kind of took another, so we came right around here, we spoke. It came and took a stab. It went back to 85. I thought we would get a continuation move lower into 83. 83 is what I've been looking for, at least 83.50. And we just kind of shot right back higher. And then we got that break above 88.50, and we haven't had a consolidation since. So I mean, I've had this on my daily chart for a while, waiting for it to fall. We could get a fall. I always want to contend that the pound always corrects, but we just have been getting more of this consolidation over time. So now this divergence, not really. Can't really mark it on the daily chart though, because we have these other highs here. But on the 4-hour chart, we've been diverging for a while, and we just keep getting these shallow corrections. Buyers
since the 17th or 18th, it looks like, of last month.
Yeah.
Okay. So we're about 2 weeks into the last confirmed high. You know, your last statement about that. The only currency that the euro could rally against is the pound. To me, it is a statement of how bearish you may be in the pound.
Yeah, the pound is actually, the euro pound is probably the laggard as we look. As I look at the other crosses and the other pound pairs, which have been they've been breaking down, particularly this week. Last week, we finally got some breakouts from some support levels against the Aussie, against the Kiwi, against the CAD, even against the dollar. Here we are sitting below $1.26, probably going to rival, trying to take another stab at $1.25 and below. The pound yen is, below $1.36.
Can you change your charts with that, Lydia?
Oh yeah, sorry, yeah. So we have the Aussie. Aussie was here at 82. That was my support level. I mean, we've since broken out below that. Even though I have this extension, guys, I'm really looking at whether or not we can break this this bigger fib here, and what that meant for when price was starting to look move lower. So we were still in a correction, and just trying to see if this was going to be more of a trend move, even though we were working within this bigger correction here. If we look at if we look at the Kiwi, the Kiwi's already done that. It had a failed high anyway, and so it's working within these bigger moves. So some of these are bigger weekly chart moves, because even as I zoom in on the weekly chart, this huge rally over the course of the last 2 years is still just a correction. I still feel like we're starting to see with the pound a continuation of the downtrend that we saw that got kicked off around referenda, maybe a little bit earlier in some of these other pairs. And then the CAD is just like, it's like,
wow.
The pound CAD is falling off a cliff. Again, looking at the weekly chart, we zoom in, it's a continuation of this larger theme. So these are things that we're just kind of seeing across the board with the crosses. Even if we look at the yen got below that really important $1.3650 level for me. It was kind of like the last bastion of support. We'd had all these support levels where we had been trying to go lower, but we would get kicked up and test 148. You know, we've been looking at 148 for a couple years now. And now we're just we're finally breaking below that. We'll probably test this spike low, and we'll see if this pattern can continue. Again, these are all these bigger themes of really pound weakness, kind of coming right back and
being confirmed by everything.
Yeah.
All currencies.
Everything. So
it's a narrative, right?
So when we look at the euro pound, let me on the weekly, like it's kind of a laggard, like
Yeah.
we don't
Really?
have the same breakouts. We're not seeing the new high with the new lows in pound would be new highs in the euro pound. We're not seeing that yet. And I really think like this is kind of the one I'm watching because it is behind. It's behind and lagging behind the other pairs. Like this is there's still opportunity here as we're below 90. I think once we get below 90, we get a spike into 90, 50, 91. We might see a pullback. But I agree with you, Dale. I think that this correction that's taken probably 2.5, 3 years finally sees us get to new highs. And sees us get to new highs technically. If we look at the fundamentals, we'll see how the market reacts to the changeover with the ECB governor or ECB president there, and see how the market reacts to that changeover, right? That change in leadership that's going to happen across all the EU top positions. So that might be the only thing. I think that's what's dragging on the euro now, but not in this case, not against it, not against the pound.
Okay, I see, Twitter sends out a thing, like an email every day of people you follow and what they're saying. And I notice that you're following a lot of other instruments besides FX right now because of your RIA and what you're doing. So anything outside the FX arena that's really garnering your attention as we just begin the summer trading season?
I think it's been really interesting to see the rally in bond prices and the rally in equities.
Together.
Together. So, bonds are basically saying we're going to have a cycle, an easy cycle, and stocks are basically saying that as well. And I think something has to give, whether it's going to be the economy. And I don't know if it's going to be the U.S. economy per se, if it's just going to be a global economic slowdown, if it's going to be a change in trade flows due to trading tensions. I call them tensions now. You can call them trade wars, whatever label we want to put on it, and seeing how that is going to play out. I said I was on earlier, and I said that we really got to wait till after the summer flows kind of finish out, and when traders, everyone is fully back into the swing of things.
After Labor Day, so we have to chop around for a few months.
Exactly.
Huh? Okay.
Yeah. The pound and the dollar are known to chop around right now. I mean, even the dollar's range bound, even as it's gaining against the euro and the pound, it's still rather range bound if we just look at the Dixie index.
Do you have a view on the Fed's meeting in July? The whole market, a lot are talking half a point cut.
Yeah, right. 50 basis points. Yeah.
What do you think?
I think that it's very possible that they don't move. It's been disappointing to see Powell kind of succumb to market forces, and I don't see why he would cut, or I don't see why they would cut rates unless the jobs report really stuns again to the downside.
Yeah, so they need cover on Friday to do this.
Because, I mean, we have equities at all-time highs. The S&P is at all-time highs.
I'll use the bullets here.
Yeah.
Is that what you're thinking? Why, if the S&Ps were 2,200, it'd be a layup. They're going to go
it'd be a no-brainer. We would have had a cut in June.
Right.
So we would have had back-to-back cuts, right? So
you're on my side. I tell you what, if we're right, Lydia, I made a $1 bet with Steve Volke, like a Duke Brothers bet. And I'll split it with you. Cool.
I was going to say, I'll make sure you collect.
All right. You watch out, Steve Volke. I have Lydia on this now. So how's the battle been going for you, Lydia? And, maybe you want to show people where they could find you. Your demeanor is great. I can just imagine what an excellent mentor and teacher you are, just by, your demeanor and your communication skills. So do you love teaching?
I do. In another life, I taught web design and computer programming, and then finally made the leap into just at least reading markets. I like to say chart art, and just kind of teaching people how to read price action. Not necessarily, and then, the start of it is learning how to trade. To me, you got to start with just reading price action and taking them through that. So that's something that I have been doing over the course of the last couple of years. I think I'm in my second year, teaching how to just read charts. And you can find that information at Learn with Lydia. Then some of my students like to take a step forward and start to learn more how to trade and trade management and things like that.
Yeah,
and,
you have a whole series of courses.
Yes.
You can show that.
Okay. Yeah, so we start off with the beginner course, and that's really just chart art. Oh, this is the course now with I teamed up with the Profit Room, and I do a foundational charting course with them. And then if you want to move forward, I took it down. I'm kind of revamping my offerings. I call it the intermediate and more advanced classes are now geared towards trading, management, and mentorship. So if you're looking for that, if you're a more advanced trader, you're just looking for kind of an accountability partner, you can contact me, via Twitter or email about that. But right now, a lot of my students that have been coming to me have been really, really beginners, just people who are looking to add to their skill sets, look to trade, or at least who are looking to add trading to their skill set and grow some wealth that way. So that's
Let me ask you this. How do you feel when one of your mentees begins to outperform you in the markets?
I'm super proud.
Yeah, there you go. You're happy. Let me tell you, does it feel as good to you as it does when you have a winning trade or better?
Yeah, because I know where they came from. You know that they knew nothing or they knew very little. And to see
nothing.
Yeah. And some of my students, like, they really, know nothing. So it's amazing to watch their progression during the course. And then when they start to outperform me, I think it's fantastic. I mean, I'm super proud because I know I was a key, element to where they are now. And yeah, when the student surpasses the teacher, I think that's a thing to celebrate.
Okay, and for people that want to be in your RIA, that's passive. You manage it and make the market allocation decisions, or do you consult with people?
Yeah, both. So
okay,
it's not as passive as some other companies. I think I want all my investors to be educated. So we'll discuss through the allocation. I'll execute them. And we'll see what I see in the market, what I think is a good investment, just depending on goals. Some people are looking for income. Most people are looking for appreciation. So we try to put a portfolio of assets together that will accomplish that. Not just Forex and stocks, but we also look at some other things as well. Obviously, mutual funds. Some folks are looking at venture capital. So we really look at the wide variety of asset classes and build a portfolio there. So yeah, you can get more information on the firm here, and you can book a call with me on this link here. I'll take you to my calendar.
Boy, your website has really evolved in the last.
It hasn't it? Thanks, Dale.
Yeah, very nice. And Lydia, when we were talking earlier about both bonds and S&Ps going up together, what's your gut about which one's wrong, or perhaps even they're both wrong?
Oh, that's something I had to consider, that they both could be wrong. I guess I'm a little old school, or maybe it's just I came up with old school mentors. I think the bond market is right.
Yeah.
Okay. It's unfortunate. I think it's unfortunate that we won't have market crashes like we should. I think it's healthy to have markets fall. So it's unfortunate that we're in a time where central banks won't allow it. I think that's where my mind is that central banks will no longer allow equity markets to fall in the same manner as they used to. And so then what does that mean for healthy market action, and can you really trust what you're seeing in equities? I don't think equities are no longer a good measure or barometer of economic condition. I think we have to look to some other markets and look at
like copper or oil.
Yeah, you got to look at commodities. You got to look at bonds. I mean, you even can look at Forex. Look at what yen and the dollar are doing. Some more less manipulated markets. I mean, when you have central banks now, they buying ETFs and stocks.
I know.
Using money.
I hate that. That
You
they
know,
go into the
exactly.
stock, with government coming into intervene directly into stock market.
Yeah, it's the stock markets. It's
Yeah.
it's a new day, so it's
Yeah.
hard to trust what equities are telling us. And for me, it's just you follow price, right? We're here at the end of the day to follow price, so you can do that. But as far as what it means for the economy, I don't think the stock market can tell us much about that anymore.
Okay. Do you have a level in the pound if the dollar is topping out, where you would start to think about long-term accumulation in the pound and wrap
Oh
it with
yeah,
that? Yeah, because I know you look at weeklies and you
right.
look at telescopes. So what do you think? Are we going to go back to the '06 low before we get a big bottom, or is it happening not in here?
I actually think that we're bottoming here.
Okay.
And so that's why I say we really need to see what happens after Labor Day when all market participants are back in the seat or back in the saddle, as it were. So right now we're contending with $1.25. These two spike lows are these spikes below 125. So $1.25 for me. See, we get this consolidation, and which is just kind of this range bound 127.50, not even really 127.75. It looks like on the weekly chart, and then we're getting this 125.80, yeah, right here, 125.80-ish. So right now we're range bound. If you look at the, like I was looking at the DXY before it came on, that looks range bound to me. Even the euro is range bound between 113 and 111. So we're really starting to get these, some regular good old summer flows where we start to consolidate some of these bigger moves, which is why I'm so, I'm actually a little surprised by the breakout we're seeing in pound weakness against the other crosses. It might have more to do with the commodity flows in those, and I think with the yen, some risk aversion with the global economic situation. But yeah, I think as far as starting to take a poke at longs, you could try to start to go long here, just because we're at the bottom of this range. But I think if we stay above these December lows when we had that big market crash, I think if we, or correction rather, as it were.
Above 24.
Yeah,
40.
if we stay above 124, if we're not able to move lower than that, and you'll also see the euro dollar will probably base around 111. If we don't get below those levels, I think we can start to see finally dollar weakness coming in, which just means that the market is finally believing the Fed. So, could it happen on a 50 basis point cut? Possibly. I think even though there's a lot of market chatter, I think people would be really surprised if the Fed pulled the trigger with 50 basis points.
Yeah,
I feel like
I would be too.
back 25, back to back is more realistic.
So you could actually take a position trade here, getting long around here, and either risking the weekly closed from 2 weeks ago, or if you really want to do an unleveraged trade, risk the low from the end of last year.
Yeah.
And hope you get a higher low and it doesn't take that out.
Yeah, and you want to position that. You might want to position before Friday or even after the release. See if we get a weak number again. We'll see the pound dollar shoot up. We'll likely get a bit of a pullback on a retest of support or a retest of broken resistance, and then you have more confirmation to take it higher.
Okay. Well, thank you so much for hanging with us today, Lydia.
Thanks for having me, Dale. Thank you so much.
My trading warrior sister, happy 4th of July.
Happy 4th.
And I hope that the rest of the summer trading season for you are, even though everyone's in the Hamptons, that there are fireworks for you and your clients and mentees to take advantage of whatever the market offers us.
Thank you so much.
Okay, Lydia. Very nice talking to you. Keep in touch, and you know how to follow Lydia, everyone listening. You can follow her also on Twitter @FaithMight, and she'll have all the links to her courses and her RIA. And one thing, no one's right all the time, but people are either ethical or unethical, and Lydia's ethical all the time. And that's a rare quality in today's barracuda, shark-infested environment.
Thank you so much, Dale. Thank you.
All right. You're very welcome, Lydia. Have a great holiday. Face, that's a wrap. Everyone have a great holiday. Remember, don't just count your pips, count your blessings, and eat 100 hot dogs. And then I'll see, the team will be here for the NFP, and we'll rock. And that's about it. I'm going to end the meeting now. Thanks again, Lydia. Adios, everyone.